Hello traders out there in Traderland. The market's in the day bullish. My name's Des here at Grok Trade. It's April 20th, 2015. Starting off the week here, the spiders up almost a full percent. The Dow up more than that, up 1.2%. The Nasdaq up 1.5%. Small caps not up quite 1%. Banks up only 0.8% compared to the rest of the markets. Gold down, silver down quite a bit, down 1.74%. Taking a look here, we are looking at the S&P 500 daily chart. On Friday, closing out the week, we broke a support line, rallied back, and then today gapped higher, rallied higher, touched a trend line, reversed from there. Now, we are staying within the confines of the apex of this triangle. It can continue to get choppy here. The last time we were at that red line, we dropped. We got near the red line here, dropped. Hit the red line here, dropped. Hit the red line, tweezer top, drop. Now we're at that line yet again. Now, can we break out? Absolutely, we could break out, and it could happen on huge volume. Today we did pop, getting to resistance on small volume. Not a lot of volume to the upside on today's pop. Now the Dow, what's interesting with the Dow is we closed below a trend line, but immediately it healed itself. Immediately it gapped higher, went to this resistance, pulled back from that. Got a little bit of a jab here. I would even go so much with today's pop is to massage that trend line and say that's the new trend line. I'm going to do the same thing with the Nasdaq. I wanted to do this in front of everybody here. We broke a trend line on Friday, gave big warning, big volume. Today we popped volume pretty good actually on Nasdaq, but we smashed our head at resistance and stalled. Question is, can we break out? The answer is yes, we absolutely can. And what I did was I added to my long positions today in case we did break out. However, I have a big time hedge on right now that I will peel off if we do go higher. However, if we drop, I will not get hurt with my longs due to the hedge that I do have in place. Small caps here. Decisive break here, but today we get right back above it. So what I'm going to do is I'm going to take this, massage this line on today's bounce, and say there we are. So quick look at the banks. I want to show you some lines that I've drawn. Don't let this overwhelm you, and I'm not even asking you to draw these, but this is kind of a cocoon that we have built with trend lines and resistance lines. And I'm watching the banks like a hawk to see what we can expect with the markets. As long as we can stay within the confines of this cocoon, all is well in the markets. However, if we start to break down from this, there's bad things. We do have a rolling over effect, which you can see very clearly with these trend lines and how they're drawn and the trajectories rolling over. Gold here, let's take a look. We have a bear flag. We broke down. Gold could be a big time short right now. This is problematic far as gold is concerned. So if you are long gold, be very careful. Get your stop losses in place. Silver is just continuing to drop. Now what's different here is this is more of a bull flag, which is more bullish and bearish. However, we're starting to drop quite a bit, and it's almost getting too deep of a drop, meaning that the Fibonacci 61.8 level is being violated. Because of that, it's not as bullish. So a couple things that we're looking at. So let's see what tomorrow brings us. Very interested to see how the markets will digest today into tomorrow's activity. Let's watch it together.